Financial Literacy, presented by St. Vincent's Catholic Charities. Watch for the timer. At several points in the video, a small clock will appear in the lower left. As the clock counts down, it will disappear. Once it has fully disappeared, the video will proceed. You may also press the triangle-shaped icon at the bottom of the video to pause it. What is financial literacy? Simply put, it is money and how we spend it. The money we use to buy things like food. It is for the homes we live in, what we support ourselves and our family with. It pays for our enjoyment in life and how we balance it all. What is currency? Currency is all of the different types of methods we use to pay for things. Things like cash, checks, cards or plastic. Bills. Bills are the paper money we use. Paper money is the easiest to understand because the numbers are right on them. $1 bill. $2 bill. $5 bill. $10 bill. $20 bill. $50 bill. $100 bill. These are the current bills used. If someone tries to give you a different bill, it is not real. Coins. Coins are the metal money we use. Coins are a bit harder because they do not have a number on them. Penny. Copper-colored coin that is worth 1 cent. Nickel. Silver-colored coin that is worth 5 cents. Dime. The smallest sized coin. It is silver-colored and is worth 10 cents. Quarter. Silver-colored coin that is worth 25 cents. Sacagawea. Gold-colored coin that is worth $1. Which one is a Sacagawea? Take this moment to decide which coin is the Sacagawea. It is this coin. Which coin is worth 1 cent? Which one is a quarter? Which one is worth 5 cents? Which one is a dime? Which one is worth 25 cents? Which one is a nickel? Which one is worth 10 cents? Which one is a penny? Which one is worth $1? Now we will show you some different groups of money. Try to figure out how much money there is. There is 33 cents. How much money? There is $101.31. How much money? There is 40 cents. How much money? There is $7.35. Plastic money. There are two types of plastic money. First, a debit card. This kind takes money directly from a checking account. For the most part, this has replaced paper checks. The second kind is a debit card. Each time you use it, you borrow money. The loan does charge you interest, so you will have to pay back more than you borrowed. Credit. Refugees begin their credit with their IOM loans. On-time payments for the right amount will build good credit. Good credit builds when all bills are on time. Importance of good credit. Shows that you make payments on time. You can borrow money at a lower interest rate for things like home, auto, student loans. Landlords check credit to see if it's good. Shows that you are responsible with personal finances. Credit. If you cannot pay a bill, talk to the company you owe money to. Explain the situation. Usually, they will try to work out a payment plan that will not hurt your credit. Here, we see a table explaining how credit is scored. The largest piece is payment history. Did you make all of your payments and were they on time? The second largest piece is amount owed, meaning how much of your credit are you using? Let us pretend you have a total rating of $1,000. And you are using 750 of that 1,000. Since you are using most of your credit, your score actually goes down, giving you a lower score. Now, let's say you are using 250 of that total 1,000 credit rating. Since you are using only a small amount of the credit, your credit score goes up. This then raises your credit score. Personal budget. Currency experiences. Source of income. What are the different ways you can make money? Expenses. What are some bills you will have to pay each month? Banks. What role do they play in financial life? Savings. Why is it important to you? Borrowing. What is the best ways to borrow money? Other experiences. What are some other ways money affects your life? Taxes. Here we have an example of a pay stub. In it, Ellen made $14.50 per hour. She worked a total of 40 hours in that week. She made a total of $580. However, Ellen does not get to keep $580. She must pay her taxes. Here we see how much Ellen pays for each tax that week. By adding them up, we see the total deductions, and this is the amount that we will reduce Ellen's pay by. Here we see the total amount Ellen receives after paying her taxes. Taxes are taken from every paycheck. If you are paid in cash, taxes may not have been taken. No pay stub means no proof of taxes paid. Which means you pay all of the taxes at once. Taxes. Everyone must file taxes by April 15th for the prior year. Filing taxes. It is saying how much money you made during a year and how much you have already paid in taxes to the government. Sometimes you owe. Sometimes the government owes you. Taxes. Not filing or filing late can make you pay more money, make it harder to get a loan, or even put you in jail. Sales tax. Every time you buy from a store that is not a grocery item, you pay 6% sales tax. This is a table that shows you how the sales tax works in the state of Michigan. If the item costs between 1 and 8 cents, there is no tax. If the item costs between 9 and 25 cents, there is 1 cent in tax. If the item costs between 26 and 41 cents, there is 2 cents tax. If the item costs between 42 and 58 cents, there is 3 cents in tax. If the item costs between 59 and 75 cents, there is a 4 cents in tax. If the item costs between 79 and 91 cents, there is a 5-cent tax. If the item costs between 91 and $1.08, there is a 6 cents tax. This tax is then added to the original price. So, if the item you are buying costs $1, you would add 6 cents in tax to that $1, making the item cost you $1.06. Sales tax. Anything that you purchase from a store that you cannot eat will be taxed. However, if you buy an item at the store that is prepared, there will be a tax added to the price. Here we have 2 hamburgers. One is uncooked, the other has been prepared. The uncooked hamburger does not have tax added to the purchase price. The second hamburger was prepared, so it will have tax added to the price. You will now look at some slides with items you can purchase from a store, and you will have to decide if it will have tax added to the purchase price. Sales tax. Here we have an apple. Would tax be added to an apple? An apple is not taxed. Sales tax. Would tax be added to pizza? A pizza is taxed. Sales tax. Would tax be added to a chair? A chair is taxed. Sales tax. Would tax be added to milk? Milk is not taxed. Sales tax. Would tax be added to soda? Soda is not taxed. Soda does not have a tax, but it does have a deposit of 10 cents. A deposit is different from a tax because you can get a deposit back when you turn the can or bottle back into the store. Sales tax. Let's practice how much it would cost with sales tax. Here we have a rubber ducky. It costs 50 cents. To find out how much sales tax we would add, we would multiply the price by 0.06. The sales tax on the rubber ducky would be 3 cents. Next, we would take the 50 cents and add the 3 cents to it. The total price for the rubber ducky would be 53 cents. Sales tax. Now we have a pair of ducky socks. They cost $2.50. Find out how much sales tax would be added, we multiply the price by 0.06. The sales tax on the ducky socks would be 15 cents. Next, we would take the $2.50 and add the 15 cents to it. The total price for the ducky socks would be $2.65. Sales tax. Finally, we have a ducky t-shirt. It cost $9.99. To find out how much sales tax would be added, we multiply the price by 0.06. The sales tax on the ducky t-shirt would be 60 cents. Next, we would take the $9.99 and add the 60 cents to it. The total price for the ducky t-shirt would be $10.59. Fixed expenses needs. Fixed expenses are bills that are the same amount month after month. And needs refer to what we have to live and work. Things such as mortgage and rent, health care, child care, retirement savings, transportation. Fixed expenses wants. The wants refer to what we want in our life, but are not needed to live and work. Things such as phone, internet, college, big house, fancy car. Flexible expenses needs. Flexible expenses are bills that can be different amounts month after month, and needs refers to what we have to live and work. Things such as groceries, personal hygiene, utilities, flexible expenses wants. Again, flexible expenses are bills that can be different amounts month after month. The wants refers to what we want in our lives but are not needed to live and work. Things such as clothes, toys for kids, entertainment, vacation, electronics. Setting priorities. Next, we will list some different expenses. After we have listed all of them, you will be given time to decide which ones are needs. Going out to eat, television set, college for kids, going to the movies, a nicer car, gym membership, loan payments, smartphone, going to the hair salon. Retirement savings. Take this moment to find out what the three needs are. The three needs are college for kids, loan payments, retirement savings. Predatory lending. Be an educated consumer. Make sure you know your rights. Shop around and ask questions before you decide. Always read the contract before you sign it. Do not hesitate to say no. Be aware of ads that say bad credit, no problem. And remember, if you cannot make the payment, you could lose what you are buying. Insurance. Insurance is something that people pay to help them in a time of need. With insurance, you pay fees or premiums, and the fee could be weekly, monthly, yearly. Examples of insurance are auto, health, home, and life. The insurance companies then pay money to cover expenses when needed. Auto insurance. There are two types of auto insurance. Collision pays damages while driving, like when two cars crash. Comprehensive pays damages done to vehicles, like if a tree falls on a car. Driving without insurance has expensive effects, such as your license could be suspended. You could have your car registration suspended. You will receive an expensive traffic ticket. Loss of property. The police could keep your car. Health insurance provides financial help when you are ill or have an accident, go to the doctor, or helps pay for medicine. Paying for a doctor bill can be very expensive. Fixing a broken leg can cost up to $7,500. And the average cost of a 3-day hospital stay is around $30,000. Home insurance. Home insurance pays for damages related to home and expenses related to fire, theft, accidents, which covers people that are injured in your home. Home insurance protects people who own their home or those who are renting. Life insurance is an insurance that pays money in case of loss of life. Some insurance even pay in case of terminal illness or severe injury. Here is a brief example of cost versus benefit of life insurance. If you are a person between the ages of 35 and 45, in good health, a policy could be as inexpensive as $15 a month. The cost can go up or down depending on age, health level, job, or many other factors. A policy could pay out as much as $250,000. So if you have a family and something happens to you, they would have some money to help out with the expenses. Why use a bank? For some jobs, it is the only way to be paid. Having a bank can make it cheaper and easier on you when you go to pay bills by not needing to go to a third party to buy a money order or check. When cashing checks, you do not have to pay a fee at your own bank. They help keep track of the money that you have coming and going. Money in a bank is safe from fire, theft, or being lost. It also helps to get a loan in the future by showing stability. Asking questions. All banks are not equal, so make sure you ask questions to know that you have found the right bank for you. Some questions are: is the bank FDIC insured? This means that if the bank fails, your money will be returned to you. What is the minimum balance at your bank so that they do not charge you a fee each month? Does the bank charge a monthly or annual fee on the services they provide? Does this bank offer free checks or bank cards? Is there overdraft protection if you should accidentally go over what is in your account? What interest rates do they offer on savings and loans? How many branches or ATMs do they have near your home or work? Originals only. Original documents must be used for banking services. When creating or using your bank, you must present original documents. No photocopies. Fraud. Always be wary of fraud. Beware of junk mail that says something that seems too good to be true. Watch out for identity theft. Keep your ID documents safe and do not allow others to have access to them. If someone gets your date of birth or your social security number, they can use your money or credit. Spam or computer junk mail is just as bad. If it seems too good to be true, it is. You have now completed financial literacy. Remember, money matters, so make it count. Thank you.